Hello again, everyone, and welcome out. This is Ankit from Maverick Currencies, and this is our midweek update for the currency and the cryptocurrency and foreign exchange market. So let's talk about markets. It's a holiday shortened week. I know it's already Wednesday, but we have one less day to work with this week. So let's talk about how things have been moving so far and what kind of changes we need to make to our trading plan for the week. Again, markets continue to throw us some curveballs, and as a trader, we just need to be prepared to kind of tackle the markets based on what we see. So let's take a look at the highlights. Again, so far, the market has been struggling to hold the gains. So markets pull back. Again, we've seen a pretty impressive move last week in the equity markets, try to find a bottom. So every time we get that big week, again, the following week is usually a bit of an inside candle that we can see, or we can just see the market can kind of give up some gains. And that's exactly what we're seeing. Market struggling to hold the gains, but it's not the same as it was just 2 weeks ago. You know, the markets are fighting now. We see this sudden pullbacks in the markets, and then we see a bit of a run up. We're kind of getting a similar price action today. We got a very similar price action yesterday. So this is where it's kind of telling you, well, the market's regime has definitely changed. It's trying to get pushed down, but now we are seeing a bit more rallies coming in, which we didn't see in the past, 5 to 6 weeks ago. The market had a lot more selling pressure than what we see right now. So something to pay attention to. But outside of that, as far as the news event goes, the Bank of Canada raised interest rates today by 50 basis points, which is in line with expectations. So the interest rates now is 1.5% in Canada. So again, since this is a global phenomena, we're seeing higher interest rates across the board. Last week, we had the RBNZ rates, and now we have Bank of Canada. So expect some more higher rates from all these central banks in the coming weeks and months. But overall, we have to kind of take a look at the price action and see how the Canadian dollar is actually performing. The cryptocurrencies are down big again today. Again, this is where this is the least kind of price action that you want to see in this kind of market environment. You want the cryptocurrency to hold gains and then see less of those pullbacks and bigger jumps when it rallies. Not really seeing that right now. We had a actually very impressive rally that took place yesterday. But if we take a look at the price action today, they are actually reversed most of those gains. So this is where the cryptocurrency still seems like they are in trouble. You have to take a look at longer term charts. Just trying to find out that the big move is really happening on the downside. And as we look at the other markets and we see these potential bottoms taking place, it doesn't look like the cryptocurrencies has a bottom in there yet. So still something to keep a close eye on. Not really a big fan to try to buy cryptocurrencies at this point. As far as the economic event goes, again, we had some data in there. So the China's manufacturing index was actually a little bit weaker. The Canadian GDP was a bit stronger, so was the Aussie. And we had the jobs opening today, and they were actually still pretty strong, 11.4 million versus 11.29. So the economic numbers are certainly not looking as bad. Just what we're seeing with the inflation and the markets, I'm not really seeing that kind of spill over into these economic numbers. So we're not really getting these big movements off of these reports. What's really driving the markets? These rise and falls that are coming into the markets, and as the equity markets kind of swings back and forth, you'll notice that a lot of these other asset classes are kind of swinging back and forth with it. So expecting very similar price action to kind of ensue for this upcoming few days. So let's talk about this week's review and taking a look at the percentage change. Again, S&P is down 1.32%. So is the World Stock VT. Crypto is up actually 1.6, but it's actually relatively disappointing as we saw gains close to 10% yesterday. We have gold that's actually mildly positive, and so is the oil. So as you can see, we got a big movement last week, and we are getting right now is the movement is taking a bit of a pause. So the one thing to pay attention to is that we are in a much better situation as we were just a few weeks ago. And we can actually see that in the moving averages. We were actually below all major moving averages, and now we are actually above the 20-day moving average. So at this point, it looks like is trying to pull back, but it could be just a consolidation before markets try to find out which way it wants to go, higher or lower. But at this point, we got a wide range, but it's not as weak as we were back here, which kind of reminds me of where we were back in March. If you remember, February to early March, things looked terrible, but then we got a nice big rally from March to April, and then that totally fizzles away. So this could be just in a process of having another rally, but so far, you just have to know exactly what the timeline is for your trades. If you still like the downside, no problem. I think you just have to, a bit of a pare back some of those expectation in the short term, as we're seeing a bit of a different price action. Outside of that, we can see the currency markets definitely had a decent move this week, so we'll talk more about it. So let's actually take a look at the percentage change. As you can see, the yen is actually what's really been the biggest mover. And I know we had all this conversation in the past few weeks, where is the yen trade really done? Because yen had a massive move that taken place, this year. And it almost looked like maybe it's about to take a bit of a pause. And then it seems like the yen has resumed its slide. So if you are not sure how to trade the yen, just keep in mind how things were back in March, when the yen had its biggest move. We are just seeing a resumption of that move. So at this point, we could see just further lows in the yen until the price action starts to show us something different. The Bank of Canada raised rates, and you can see the Canadian dollar is up 1.51%, and then followed by the Aussie, which is also up 1.11%. So if you were trading CAD yen, Aussie yen, that's the place to be. But outside of that, notice that there's not a whole lot that you can actually chew on. Swiss franc, euro, pound, they don't look that good. Even the Kiwi, which I was actually excited for. I know we talk about this at the office. Bank of Canada, the RBNC is also the one that's raised rates. And the price action was a lot more positive last week, but here we are, price actions start to dip, and we just don't like that price action because we want to get some follow through as post these news events. So that's a way so we can see if there's a more further follow through in that price action. But this is a very selective price action in selected currencies, and that's exactly where you have to keep an eye on velocity scores and see what's moving and focus on that, rather than trying to figure out what the Swiss franc is trying to do here in the shorter term, because clearly it's not the one that's on the move here. And same thing with the cryptocurrencies. Again, these numbers look very off, because if you take a look at the yesterday's to today's price action, you'll see that the numbers are just swinging back and forth. So you have to really pay attention to the charts when you take a look at the cryptocurrency markets. So let's do a quick market analysis and actually see, okay, what else we can find in these charts. So the world markets, the world stock index is doing the exact same thing. We've seen the S&P actually doing the exact same thing. The charts look very similar. They're off the bottom, above the moving average, and just trying to consolidate a little bit here. So outside of that, again, the market price action, right now, I haven't changed that yet. I think I'd rather bring that up to a 0, because after that big move last week, I don't want to stick a neck out and say, well, yeah, that was a bear rally and we should short it here. And neither it's at a point where we want to be buying very aggressively, because we could, like I said, we could see a bit of a consolidation that kind of takes place there. The chart to pay attention to is the cryptocurrencies, and you can see that we got a nice little update yesterday or a couple of days ago, and a bit of an inside candle, and here we are, be giving back most of those gains. And as a bull, if you're trying to be a bull on this cryptocurrencies, that's not what the price action you want to see. There's been many times where these price action looks much better on a day-to-day basis, but then it just kind of fizzles away, so it's not a trending based move. It's just making a bit of a sideways play for the shorter term. Now let's take a look at schedule. So Bank of Canada is already out of the way. It's a holiday shortened week, so we got 2 more days to look up to. So tomorrow, again, we have the ADP non-farm employment numbers, but I think the big thing to focus on is on Friday, the job support. You can see that they're still looking for a drop in the unemployment rate and a employment change about 325K. So far, they're not looking for a terrible job support. They're looking for, a decent job support. So this will be something we'll be paying attention to. We'll be trading live and see if there's an opportunity around this news event. But usually, whenever there's a surprise, you get a big move. So we'll have to look at the price action on that day of. So let's do a quick currency analysis and then take a look at some charts, because that's where we can find out what's really moving and see where we're going to set up our trap here in the markets and see where the opportunity is. So let's take a look at the trading view here, and let's jump into the markets. Again, let's talk about today, because the price action has been very much volatile, and we are getting these big sharp drops to the big sharp bounces. Again, this is a lot different than, as we scroll the charts here. We actually seen some big drops, but without really any sort of rallies in between. And here we are, we're getting this wild price action. And as this price action kind of moves in a certain way, you'll notice that other currencies or other assets will kind of move along with it. Aussie dollar is a good example, as you can see, as the market kind of sold off this morning, and then there you go. You got a nice big move in the Aussie dollar as well. But outside of that, I think what we're getting here is a bit of a chop. And whenever you get a chop like this, and I mean Aussie dollar, we just use that as an example, you can see things are not really going places. If you take a look at yen crosses, again, the charts will look so much clearer. But outside of that, if you look at some of these other pairs, you'll notice that they're not really going anywhere. So it's better to take a look at what's moving. So let's talk about yen. Yen, again, going back to the charts here, we actually bottomed out back in April. We've had a bit of a month and a half of a rally, and here we are very aggressively giving back those levels. So now looking at this level here, go to a daily chart or weekly chart. They're all pointing this to a bit of a bear rally, which means that it wants to go lower. So we want to keep an eye on this low that we initiated back in April, and if we break that, I think there's going to be a lot more further downside here. And as we go into longer term charts, I know we look stretched, but again, look at where we are. We can easily kind of drop back to the 2015 to 2016 lows, which is kind of in sight right over here. So there's still some areas for that to achieve. And even if you take a look at some of these charts, like the dollar yen, again, we talked about dollar yen before, and there is a nice little pullback that we can see on those daily charts or even a weekly chart. So we are actually rebounding much faster, and a lot of these yen charts will look exactly the same, like CAD yen. And we talk about CAD yen in yesterday's market recap, and you can see it rebounded really nicely, and we actually broken out to new highs. So this is where you want to then now go out to time frames and see, okay, where's the other levels that we can get to? But at this point, when there's not a whole lot of resistance that we can find, which means that market price action could continue before it really finds a level to kind of take a pause at. So CAD yen, if we take a look at Aussie yen, they're all kind of doing the exact same thing. They're all trying to rebound and maybe break out. So CAD yen's already broken out, but outside of that, other things have not really broken out yet, but they are kind of on the path. Swiss franc yen, you can see very impressive, about 600 to 700 pip rally. So I mean, wow, what a year for Japanese yen. We don't really see the yen moves to this extent as what we have seen so far this year. So big moves, and I think as you try to figure out, okay, where's it heading next, just go out for the weekly chart and even go out time frames. But I'm sure as you go out, I mean, you'll find that we are sitting at levels that we haven't for years. And in this kind of market environment, you want to just follow that price action till it fails. So regardless of what time frames you're looking at, an hourly chart, daily chart, make sure you're on the right side of the markets, and then you're looking for those setups. Now, outside of those ones, let's talk about dollar, because that's where some of the big questions were. The yen has done its move. Dollar was actually really hot, and then dollar has fizzled out quite aggressively, I would say. After being strong for 7 weeks in a row, this thing has fizzled down pretty fast. So at this point, do we expect some resumption in the dollar, something that we need to pay attention to. But so far, as you can see on a 4-hour chart, we are actually above the 20 to 50, but it's not a straight arrow. I mean, we get these moves and we see a bit of a correction that kind of ensue after that. So right now you can see that we got a nice little big move up earlier today on this market sell-off, but then here we are. Our market's recovering, and there goes the dollar pulling back. So dollar actually, it's not really showing me a big, a +3 as you want to see, like a -3 on the yen. This is not really showing a +3 on the dollar. So I think dollar, you have to really use reasonable expectation. Not really ready to make a run yet, but it's definitely off the lows. So I think maybe some consolidations. So the focus really again goes back to some of these yen crosses. We can also take a look at other currency baskets which have actually been doing much better, like the Aussie. You can see that the Aussie on a daily chart has actually been down in a downtrend since topping in April, and here we are trying to rally a little bit again. And after that sell-off this morning, the Aussie took a hit, but then here we are recovering right away. So whenever you get a price action like this where it just recovers really fast, it's just telling you maybe it's not as weak of a price action as maybe you want to see. We are rebounding, and I know traders like to talk about correlations, and this is where I like to only follow correlations when the correlations are working. And at this point, as market volatility is there, you have to kind of go back to Sierra and see, well, there have been times that the Aussie should be down, but Aussie was actually up. And there have been times when you expect Aussie to be up and it's down. So you really not want to pay attention to correlation as much, but just pay attention to where the direction is and just follow that direction. We see things deviate from time to time, and that's why following correlations are not always foolproof, because they're not always 100% mirroring the moves. There have been times where deviate from each other, and that's where it's difficult to build a consistency if the price action is going to be reacting differently all over the place. So you have to adjust to the market conditions accordingly. I'm not really seeing any other good opportunities. I mean, Euro has been gone sideways. Kiwi is another one that I had a lot of questions about, and you can see on this is not a chart that you want to be very excited about. I was actually a lot more excited for further gains in the Kiwi, kind of take over the role from the Aussie. So if you go into the Aussie Kiwi chart, you'll notice that this has been deviating for quite a while in the past few months, and things have been kind of shifted. And here we are. We pull back. We almost tested a 50-day moving average, and almost now back to the resistance level. So at this point, it seems like the Aussie is in charge again. And if it does break out, I mean, this is a very important level of resistance as you can go back. As you can see that there has been a handful of times in the past few years where we've been above it. But then back in 2017, we were much higher than the level that we see in the Aussie Kiwi, about 112 to 113. So further upside, it seems like it's likely there. And same thing with the dollar yen. Dollar yen has made a nice little rebound, and if you take a look at the price action, actually go out short longer term, this is the line that I've drawn over here, which is about 133 to 134. I think could act as a next meaningful resistance level. But where we are right now, I think it could have a lot more bit to the upside once it breaks out above this level here. So interesting moves overall. So, and as a trader, you want to be just trading the markets in front of you and pay attention to the velocity scores. Can't tell you enough about making sure that you're on the right side of the markets. And a week like this, your experience would be a lot different if you were trading the euro or the Swiss franc or the other currencies compared to the -3 on the yen and the +3 on the Aussie and the CAD. So those are the trades that I'll be paying attention to. In conclusion, again, market looks mixed, but powerful moves one way or the other. So just hang on tight with the markets and just identify the market regime change. So whenever those market environment changes, you change with it and you adjust your strategies for it. If we're getting a bit more volatility but lack of direction in certain areas, that's okay. But that's where we need to change your time frame, especially holding period for those trades. U.S. employment report again will be in the focus on Friday, and we'll be actually meeting live for it. So make sure you go ahead and register it from the schedule. And again, Japanese yen remains a top short here. So thanks everyone for joining. Have a great rest of the day. We'll be back with another update. Till then, take care.